Hey everyone, welcome back to another episode of my M1 Finance portfolio series where I'm attempting to reach a $100,000 portfolio in this platform, M1 Finance. And when we last left off, I was in the negative for the first time in the 2 years or so that I've been running this portfolio, and I've added a lot of money since then. So a lot of the gains actually came kind of in the earlier stages of the portfolio when I ramped it up really after the crash of March of 2020. So many people have benefited if they invested since then. A very large portion of this portfolio has been added in the past 6 months or so. If we look at today, we're at about $90,000, but if we go back about 6 months to October or so, we were in the 50s. So a very large portion of the portfolio has been added pretty recently, and recently the market hasn't done too hot. But that said, where we last left off, I was in the negative, but now we have regained into the positive, which just shows you how stock market investing can be. And especially with a relatively concentrated portfolio that I have, some would argue it's not all that concentrated, but I have less than 20 holdings in here. So it is a pretty concentrated portfolio from that perspective. But in any event, it's a rocky road sometimes. Things will go up, things will go down, news will change, sentiment will change, and a lot happens sometimes just for no reason at all. This portfolio actually got as high as 94,000 just a few weeks ago. So again, it's a rocky road sometimes. And as the portfolio grows, the swings will grow too, at least in nominal terms. It's going to turn into multi-$1,000 swings rather than $100 swings like it might have been many months ago. But I guess that's a pretty good problem to have, although it can be pretty exhausting depending on how actively you're managing your portfolio when you're seeing the daily fluctuations in prices. So instead, what I try to focus on first and foremost is adding more money to this portfolio consistently. I have some cash here in my buying power I added recently, and it'll be payday pretty soon. So at least as of the day that this is released, that'll be payday. So I'll probably add some more money to this portfolio as I have been doing for the past year or really few years. Just now I have a full-time job. I was still in law school when I started this portfolio, so my income wasn't all that high at the time. But now that is no longer a problem, but thankfully I built the habit of adding money to my investment portfolio every single month. Whenever I got paid, at least some portion of my income would be going towards investments. And so far, so good. I've continued to build this portfolio up to where it's becoming a pretty significant thing, although it is still quite far away from where I really want it to be long term, but it's a good start. And to that volatility I mentioned, let's take a look at some of the action we've seen in the past month. If we go to my value slice, which is the large portion of the portfolio with many losers in it so far, Turtle Beach actually pulled back quite a bit in just the last week. If we go to the 1 week view, it fell about 8% in 1 week on really not a lot of fundamental news. So that's unfortunate. There's some weird rumblings of a takeover from this Donerail group I've covered on the channel before. It seemed like they were kind of a non-serious buyer, but they seem to be showing themselves as very serious, and they have a whole slate of board members that they're trying to install apparently. So there's definitely some significant drama over at the Turtle Beach board. So we'll see what happens. I don't really know what to make of it quite yet, and we'll just have to see where the chips fall. I'm not too worried about it as of now, partly because I'm just not really sure what's going to happen with that. It doesn't seem like it's particularly likely to happen, but it's something, and I'm keeping my eye on it. I'll go ahead and switch it to the 1 month view instead so we can really see what's happened over the last month. I'm filming this as of April 13th, so we'll see what happens by April 15th when this comes out. Things could obviously change, but hey, we'll see what happens. Again, volatility. But otherwise, actually, Turtle Beach was pretty flat on the month. I didn't realize that. I thought it had actually fallen quite a bit, but it fell from its high during the month, at least between the two M1 Finance episodes. Meanwhile, we had a pretty big spike in Dropbox that was pretty much negated by a pretty significant fall in Sleep Number, and pretty much everything else was pretty flat. Relatively speaking, Smith & Wesson lost a few percent, but that's what you're going to see month to month. You're going to see some pretty significant swings to the upside or to the downside, especially when you have individual holdings in your portfolio, though index funds can do some pretty crazy things too. Let's go ahead and back out to the other portions of the portfolio. The big gain over the last month was in big tech because I kind of nailed the bottom, at least partially, with Alibaba, but that's really because I've just been buying constantly as it keeps going down and down, and actually a little bit with Facebook as well. I built out kind of a half position in Facebook. It's not as big as I would really want. I would rather have a larger portion of the portfolio for any particular position like this, an individual company, but it was only down under the $200 mark for a very short period of time before it kind of shot back up, and I've been kind of short on cash over the last month anyways, as I've been putting some more money towards my tax advantaged accounts like my retirement accounts, my HSA, trying to sort of buy some tax deductions as we gear up for tax season, which is going to be ending in just a few days. But we'll see what happens with Facebook. Meanwhile, Alibaba also went up quite a bit, and this was from a very low of about $80, and I think it got as high as $115 per share, something like that. Now it's down to 100 again, so we'll see if it gets back down to 80. Could happen. Again, volatility, it's a lot of fun, but hey, that's where the buying opportunities often are. I bought a decent portion of my shares when they were under $80, so that's why I was able to gain quite a bit over the last month, because it shot right back up over $100, but yeah, we'll see what happens and how long that actually holds. And if we go back to the all-time view, we're still down quite a bit since my cost basis is around $120 per share, and it's only at 100 right now. But speaking of Alibaba, we have to address the elephant in the room, and that's that Charlie Munger sold half of his stake in Alibaba, or really not Charlie Munger, but Daily Journal, which is kind of his holding company. He's probably better known for his role at Berkshire Hathaway, and he's a major owner in that company, but he also has his own holding company, that being Daily Journal Corporation, which has a number of stock holdings, including, more famously, at least recently, Alibaba. And since revealing his position a bit over a year ago, he actually doubled down twice as the stock just continued to go down and down and down. I think he started well over $200 per share, and now it's all the way down to $100 per share. And as it went down, he doubled down twice. So he quadrupled his position, but now he has halved that quadrupled position. So we're back down to essentially a double from where he started. If we head on over to Dataroma, we can see a bit more on what's going on with Charlie Munger's portfolio. And normally there really isn't a whole lot, at least that we can see. He does have other holdings as far as we know, but we can't see them because he's not obligated, or Daily Journal is not obligated to disclose them. So keep that in mind, and we'll get back to that in just a second. But you could see that he reduced the Baba holding by 50%. But this does come at an interesting time. This is right after there was some drama over at Daily Journal Corporation where, or at least some perceived drama, where Charlie Munger is no longer the chairman. He's still on the boards, and he's still obviously a significant stakeholder, but he's no longer the chairman. So you have to wonder, does this Alibaba decision have anything to do with that? Was there some disagreement between multiple people on the board, including Charlie Munger being maybe the odd man out of the group, and maybe just didn't want to deal with the headaches anymore as much as he might have otherwise? So he dipped out, and as soon as that happened, they sold off half the position because maybe they weren't comfortable with it. I know they've taken out some margin debt in recent months, probably to fund these purchases, but it's still a large position, all things considered. We're looking at something like $33 million as of this filming. But one of the big reasons that this Charlie Munger Daily Journal Alibaba news has been so big and so significant is that a lot of people copied Charlie Munger in going into Alibaba. So apparently not too many, because the stock continued to just go down and down and down ever since he bought into it in the first place. But it's pretty hard to argue against one of the greatest investors ever investing into a company and saying that that would be bad news. It's definitely a good thing for pretty much any stock when you have that kind of vote of confidence. But a lot of people take this sort of move very, very seriously because they're trying to copy investors like Charlie Munger. They're cloning the super investors out there to try and get outsized returns that way. And it's certainly one way to do it, and it could work well, and it could work not so well. Alibaba is one of my holdings that I would consider a clone first and foremost. It really was thanks to this vote of confidence from Charlie Munger and sort of believing the numbers out of China. That was a big concern of mine, and it's a big reason that it's not a larger portion of my portfolio, because the fundamentals look great on paper, in my opinion. You, of course, should make your own decision, because I don't know what your specific situation is, so you should do your own research before you invest in anything, not just Alibaba stock or not investing in it. Whatever you want to do is up to you. But one of the most challenging things with cloning is the issue of conviction in how to weigh holdings, whether this holding makes sense in the broader scheme of your portfolio. That's where it gets very complicated, because Charlie Munger does not have the same sort of risks, does not necessarily have the same sort of incentives, and doesn't have a lot of the same things that a smaller portfolio run by one guy, me, would have. And then every single person has their own sort of competencies and interests that could lead them towards different investments that would lead to different decisions when it comes to picking stocks or any investments. It doesn't just have to be stocks. And this is one of those moves that's very confusing, in that it's very hard to tell why Charlie Munger and Daily Journal would sell half the stake. Is it because they're trying to move out of it completely? Are they rotating that money into to something else? Is it because they didn't really want to buy that much in the first place? Is it something to do with conviction, or is it something else? It's very hard to tell what exactly is going on. There's even a theory that he's rotating the holdings into the Hong Kong listed version of Alibaba, which seems a little bit out there, but hey, it's a possibility. We don't really know what's happening. And that can be very frustrating if you're trying to clone someone like Charlie Munger. How do you weigh your Alibaba position now? Do you cut it? Do you keep it where it was? What if you really like the stock, but you're trying to hold true to your cloning values? It can be very awkward right now to try and make that decision. And that's why it's still important to do at least some of your own research and due diligence when investing in anything, because if you don't have that conviction, this is where times could be very tough, or you just don't really know what to do because you don't have great conviction in whatever you're buying. So that when you see this sort of half sale, you don't know what to make of it, and then you're just confused, and that's no good. This isn't to say that cloning is always a bad idea, but it is something to keep in mind. This is a risky run when you're trying to clone investors, especially super investors that have a very different sort of situation than a smaller investor might have. That's why I tend to use super investor moves as more of a vote of confidence or for ideas rather than a true, yes, this is the green light to invest in this thing. It's not quite that simple, at least for me. You can obviously do whatever you want and it can work well. But especially when you don't have the full context of what's actually going on in something like Daily Journal's portfolio, there's a lot of money that is kind of unaccounted for that we don't really know where it is. But if you did know where all the money was, then you could trim the position accordingly because all the money's accounted for. That's not the case here, and that's often not the case for super investor portfolios. So for me, I'm going to be hanging on to my Alibaba stock, at least for now. Of course, things could always change. If fundamentals change, then that would be a reason to revisit the thesis, see if it still holds up, see if the price is appropriate relative to that thesis, and that's really what investing is all about. But I'm still going to keep an eye on what Daily Journal is doing because it is interesting. But whatever the case, I am investing for the long term. I'm looking years out ahead when I'm making any investment, or pretty much any investment. I am planning on holding for the long term and seeing how things play out, and I'm paying attention to the fundamentals as we go. Meanwhile, I'm looking for opportunities to keep deploying my cash as it comes in, because again, I'm trying to build this portfolio quickly by adding new money to the portfolio, and any gains from there obviously are a nice bonus. But the returns I'd be expecting are much more long-term oriented. I would really want to see what's happened 5 or 10 years from now to really get a good gauge on how I did, because whatever happens from month to month can be pretty wild and isn't really indicative of the fundamentals of an investment, at least in many cases, because Mr. Market is manic depressive. Anyways, if you like this video, definitely like it. If you want to check out M1 Finance, I always include an affiliate link in the description below. Would appreciate if you check that out, since that would go a long way towards helping the channel if you fund your account. But until next time, take care.